Hi everyone, hope you're all doing well. This is Tricia with Easy E-mini Trade, and I'm going to go over a couple entries on two of my favorite setups, one being the Slinky, one being the 1-minute setup. I've been trading these setups for years now. I will be doing a webinar next Saturday, the 16th at 11 a.m. Eastern. You'll have that info in the email that I just sent you this link in. If you'd like to go ahead and register. If you can't attend real time, no worries, it's going to be recorded, and I'll go over these two setups in complete detail, all the settings, taking them, my entry techniques, etc. If you have any questions, feel free to shoot me an email at tricia@easyeeminitrade.com. So let me go ahead and show you some entries from Friday that you could have taken. So this is Friday. I've got ES up here. Here's the 1-minute chart on the left. Here's the 4 range on the right. Now for the Slinky, I like to use a range chart. You can use a tick chart. The time-based super trend stop settings and the range super trend stop settings are different, and I will go over those next Saturday. But for the purpose of the Slinky, I like a range chart. You can use a tick chart if you prefer. And I'm always looking for price to be breaking the super trend stop and my double stochastic to be in agreement. And I'm always looking to see where areas of support and resistance are. If trading off a range chart, you find that the price bars are forming way too fast, then up the size. So if ES is trading too fast, then I'll up it to a 5 or a 6. If you're trading NQ during regular trading hours after the market opens at 9:30, you're likely going to have to use a 16 range or a 20 range. I have only been trading NQ pre-market and using an 8 range chart. If it's too wild and whippy, then I just change to a different instrument. I'll trade ES pre-market, I'll trade NQ pre-market, CL. Then once the market opens, if I'm still trading, I'll trade ES, YM, and the Russell RTY. So again, experiment, play with it, but definitely do it in sim or using the micros where you don't have a lot of money at risk, okay? So on the right, again, got the 4 range on ES, 1 minute on the left, and I'm going to just go over a couple trades, off the open. I'm going to skip ahead to a little bit after 9:30 because I don't trade right off the open. Of course, you do whatever you feel led to do. But right here, I have an entry, price closing above the super trend stop. My stochastic is in line here for my buy. So I can go ahead and buy a tick above that bar on the range chart. I will buy above or below the setup bar, which is the bar that closes above or below the super trend stop. On the 1-minute chart, if it's in line for my entry, then I'll just place my order. So what to remember is that these are two totally separate setups. One has nothing to do with the other, okay? So here I'd put my buy in. Now if I was taking this, I'd be looking at this area right above at 90.25 because that's the previous day's close. So if I take this entry at 80.50, I would go in knowing that, okay, I might have some difficulty up there around the 90.25 area. So I would use that as a first target area, and then if I have multiple contracts, once I hit my first target, then I can move my stop to my entry area on anything that I'm holding. And then once it trades through this area here on anything that I'm holding, then I can pull my stop just under this area and wait for the next area of resistance to hit, which is going to be up here at 94, then up here around 95, that's the halfway mark. And then I would be looking over at a larger chart to see what would be above 95. Now you can use your 1-minute chart, you can use a 5-minute chart. I'll use a 5, a 15, whatever chart gives you a clearer vantage point. It does not matter which one you use, you guys. So if I was looking at this on the 1-minute chart, wanting to see what happened above this area here on the range, then I can look over here and just look, okay, what happened to the left of this area at 94 as prices climbing higher. So if I was looking at this, I would look up at this area here around 97. I'm just going to draw a line because of these bars right here. So that would be my next area that I would be looking for a price reaction. Next area I would be looking at would be right in the vicinity where we have all these bars, and that is going to be around 44.01. Now I'll just use 4,400. What you'll find is that on any instrument that you trade, if you have a round number, like 4,400 for example, likely you're going to find that price is going to struggle in the round number areas. As you can see, it happens here, all around here, so that would be where I would be looking. Then if the price can get through the 4,400, then I would be looking at the general area of the vicinity here around 2 and then 350. So it's always a question of planning out your trade based on where you think price is likely to react. Now, with all that being said, when I do the webinar next week, I will show you how I come up with my target areas and my stop areas using just an arbitrary number. Like, let's say, okay, I'm going to use a 2-point stop. That's unrealistic if, like, for example, you're long and you're using a 2-point stop, but support, an area below you that is likely to hold, is 3 points away. You might want to use like just under that 3-point area as your stop. So this way, if price pulls back to that area and holds, then bounces, and then continues to move in the direction that you anticipated, you're still in the trade. I hope that makes sense, and I will go into this in a lot more detail on Saturday. Now here, price breaking the super trend stop on the 1 minute. You can see it right here, the blue right here. So price breaking that. Now, my stochastic is in line for that, but when I'm taking an entry off the 1 minute chart, I want to be above that 30 EMA. So in reality, this would not be an entry that I would be willing to take. And regardless, I'm already in here, so I don't have to worry much about it. But for the 1 minute, that would have to be a pass. Here, when I get the short on the 1 minute, it's not valid because my stochastic does not agree. Now, ignore this where it's saying short here. This is giving me the present condition, which would be, you know, where it's at right now, so it's short. So that's why, you know, just ignore what that's saying here. But if I scroll back, so let's just go back to the morning. So let's go back to where we were. So let's go here at just before 10. This is valid for the buy, but it's right before news, so I'm going to pass on that. I don't trade into news, so if there's an economic report coming out, then I just sit on my hands until after the report comes out, and then I'll look for my entries after that. So I usually like to sit on my hands, you know, maybe 10 minutes, 15 minutes before the report comes out, because it's out of our control, right? We could have the best setup occurring, but the news is going to dictate what direction that's going to move, so it's a pass. Here, looking at this short, it's at a very strong area of support, so I'm going to pass. Here's the buy. It's valid. It's into resistance. I can always decide to take it, but I have to determine, is there enough room to be profitable? If there is, then I take it. If not, then I pass. You don't want to take a buy into resistance and then have to pray that it gets through. You can take the trade just being aware where price might likely have some difficulty. So then this way, if you decide to take it and it can't get through, then you can get out up here around that 94 and change from your entry down here at 92 and change. So it's not terribly hard to figure out, you guys. Wherever you're taking your trades, no matter what setups you trade now or ever, you always want to ask yourself, where is price likely to get stuck? Is there enough room? You want to plan the trade out before you ever take it, not take the trade and then worry about it. And here I get a short on the 4 range, and I can see I've got support down here. So if I decide there's enough room to take it, then I can take it. My entry would be 96.50 with this area here of 95. Is there enough room? Questionable. Now, one thing I will like to point out is when you get a 40-point gap between the two stochastics, this is always a heads up that whichever direction the green line has to move toward the red is generally the direction price is going to move to fill that space, or it will go sideways. So in this case, you can see I got my green line below the red, I got my 40-point gap. So when I see that, what that's telling me is, okay, price is going to move higher or go sideways while that space fills. And you'll see it over and over and over again. It works out almost every time that is an early warning heads up. So for example, if I took this buy here, it's valid for the buy, but I can see I've got my 40-point gap here. And I've got Gordon's easy stochastics indicator on here that I'm using for my stochastic. So it's marking the 40-point gap. So I know if I take this buy, I'm likely going to have to sit through some sideways or a pullback before this ever moves higher. So that would be likely one that I would pass on for that exact reason. Here, same situation, except in this case, I have support pretty low below me, so that's the previous day's close. So I could go ahead and take that if I should choose to, knowing that support is likely to be the area. Now, what's going through my head right around this time as I'm seeing that is that news is right around the corner. So those are things that you always want to keep in mind. The other thing, too, that you guys seem to lose sight of is that you don't have to take every single trade. Once you've had a few good trades or a couple good trades or one good trade, whatever you decide, you don't have to keep trading. Shut off your computer. That's when most of us give back our profits. It's because we always use the one trade more mentality. Let me take one more trade, one more. Then we wind up giving back what we made, and now we're playing catch up. So anyway, that's what I like to do, and I'm going to go over a lot more information on Saturday, as well as how I like to use my 15-minute chart to plot support and resistance areas. And then I can always look at my 60-minute chart. And what I'll do is I'll put the full week's volume on the 60-minute chart, because the thing about support and resistance, if it has been something that you've been ignoring, you're going to find that price is always going to react at the same areas repeatedly, no matter if it was an hour ago, a week ago, a month ago. So definitely, if I were to tell somebody to work on one specific thing, that would be it. Work on getting better at plotting your support and resistance areas. Okay, you guys, I hope I see you next Saturday, and have a fantastic day. Take care.